Have you ever worked with MACD? How much knowledge do you have to utilize the information provided by MACD? In this video, I will explain MACD in detail and introduce a strategy that combines MACD with another indicator, so stay with me until the end of the video. To get started, go to the Indicators tab and search for MACD. MACD stands for Moving Average Convergence Divergence. Click on it. You can see that is added to the chart and has four parts: the MACD line that is blue, the signal line that is yellow, the columns they are green and red, and the zero line. Now that you know all the components, it's enough to explain how to work with MACD. As you can see in the settings, in the input tab, the fast length is related to the MACD line and it's 12, and the slow length is related to the signal line and it's 26. The MACD line moves more aggressively than the signal line in response to price changes, just like the difference between 20 EMA and 100 EMA in relation to price changes. When the MACD line crosses above the signal line, the histogram changes color from red to green, and as long as the MACD line is above the signal line, the histogram remains green. When the MACD line falls below the signal line, the histogram turns red. And as long as these two lines don't intersect again, the histogram will remain red. The histogram represents the difference between the MACD line and the signal line. And the greater their distance, the larger the size of the columns, indicating a stronger trend. The simplest thing in MACD is that when the histogram is green, it is likely an uptrend, and we are in a buy zone. Conversely, when the histogram is red, it is a downtrend and we are in a sell zone. The higher the columns, the stronger the trend. However, MACD may give us false signals at times, such as in this example where the trend is downward but it gives us a buy signal. To compensate for these errors, we need to add another indicator. Go to the Indicators tab and search for Moving Average Exponential or EMA. Then go to its settings and change the EMA to 100. When the candles are above the line, we are an uptrend and we can consider buy orders. When the candles are below this line, we have a downtrend and we shouldn't look for buy orders at this point.
Buy setup.
As you can see here, the MACD line crosses above the signal line and the columns change color from red to green. We only need to look at candles and place a buy order if they are above the EMA line, like in this example. We set our stop loss below the previous low of the market and risk to reward ratio will be 1 to 1.5 or even 2. Based on your backtest, this amount can be different. Now, it's enough to give you another example so that you can learn this strategy. For sell orders, we do the opposite of what we did for buy orders. Don't forget to like and subscribe.